morning. Hear me in YouTube land.
We have subscribed 184 contracts.
Thank you, Madam Shizzle. I'll be back in a minute. Maybe. Hold on here.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in most Pulcini Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any accountable is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results damage or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. Analysis themselves, I share trades and potential trades that I take for myself based on my personal analysis. The goal of this room is to teach trades on identify specific areas of trade and themselves, but ultimately the decision is yours. Trading is extremely risky. If you decide to follow my personal trades, you sort your own risk and can potentially lose your entire account and even more. I'm not always profitable when I have routine drawdowns on my trading accounts. The spreadsheet we have access to is my personal spreadsheet that I use at zone values and ADR values and I'll need weighted exact prices for my trades. You can see when I add zone prices into the master spreadsheet as well as the prices that I trade, whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. All right. Good morning. Welcome to Bizarro World. So I am currently short NASDAQ. Not sure why. I do know why. There was a setup in an important area, which we'll go over, but the one thing I overlooked that someone in my trade room pointed out is I basically shorted right into or very close to a Ludwig level. So, you know, these markets are ridiculously bullish, as anybody knows. So, you know, I usually will not take shorts into the lugs because they're so powerful. So I took an Izzy. I could take a bark and a lick. We'll go over these if I can find my drawer here. Hold on. But I'm going to pass on those until if we get new lugs. So we'll go over the whole structure stuff here in a second. But so this was a huge sell ice zone, basically right at the open. Turn some of this stuff off too, so we can see what's going on here. So you can see here, this was 215 here, and then you had little guys coming in too, basically in this zone. So I took Izzy trades. So this inflection zone here, this is the trade that I took. So my whole strategy, my whole philosophy is looking for these volume events, which are concentrated areas of trades/traders, and trying to take advantage of who's right, who's wrong, based on my rules of the volume events. So this is stuff that's happened in real time. This is stuff that I've drawn in the past. It could be any area. I have multiple areas that I deem important. These are one of them, inflection zones, right? We'll go over what these are, but if I get a volume event in an area, and then I trade it, right? So this one turned out to be a bearish event at the time. I pretty much got filled with a tick as usual, that already happened to me in gold today, and I took it on the chin. We'll go over that too. But so based on watching tens of thousands of these things legitimately, I've determined if the market's able to move an ATR, that's the blue line. It gives me a pretty good indication on whether the market is bullish or bearish, or at least the volume event. So sell ice came in. All right, we got something else. So I could be going. I'm already short Izzy. Izzy is the first inflection zone. All right, so this is good too. I could trail my stops. So I got in first move out here. Izzy's are usually first move out There are a couple exceptions, but I get in aggressively, meaning just outside of an ATR. So that was my entry. Stop was up here. Tortured me. Thought I was going to get stopped out. Didn't do anything because I forced the market to get through the volume event, push out of the volume event, outside of an ATR. Then I say uncle, on to the next trade. I survived that. I'm short. New event. Now I can actually trail my stop to this event versus where it was off of this event. I did not put on the barks and licks here because we're into the blue lug. If this blows through the lug, then I'm ready to go, you know, full bore short, not full bore, but you know what I mean. So I am going to watch this. If this bounces off the slug 79.75, I'm probably going to get out of a couple of these just because we were talking about, I think it was Tuesday, we caught a short and it was like 30 seconds. The thing sold off, bounced off the yellow lug. You know, when a market is in a certain condition and you're trading opposite of that condition, if you do get the move in your favor, you'd be very wise to be getting out at important areas. Not the whole thing, but I mean, and not questioning like, oh, should I get out some here just because this market's so bullish. So anywhere down in this 79, 80 area, I'm going to definitely cover a couple if I don't see this thing blow through. Now we can use a couple things to determine if it's going to blow through, right? We got obviously tick strike, so this is showing me the Mag 7 stocks, the highest weighted stocks, and then we can use market pulse. So there are a couple different things I've been watching. They're coming out with some new stuff. I've always used the volume pressure imbalance. That's this right here. You can see here. Here's this piece of tape. Hold on, let me turn this off here. So that's the volume pressure imbalance. It's one of the market pulse algos, right? That's this one here. This is for soybeans, but it's the same thing. So I set the only thing I change on this from the default is I change it to an hour. So this is basically showing me this has been the heaviest selling in the last hour, one of the heaviest selling periods. Yes, it was related to the stop run, but usually stop runs don't trigger the most selling in the last hour, especially if it was only 162, so meaning there was something else behind this. And then you can see these sweeps coming in too. So somebody's sweeping the order book and it's holding, right? So I'm watching this area very closely now. If I'm not seeing anything in the pace of tape or the volume pressure imbalance, see this is right at that blue lug, so I'm gonna get out of a couple right here. I don't need to be pushing my luck. I'll give it a second here because you see these are firing off. Let me see what pace of tape is looking like here. I'm gonna give this a second. I'm probably gonna hop out of a couple. Hopefully it can blow right through here, but you can see it's right there. I'm gonna get out of a couple here just because I'm not gonna be able to monitor it that closely, and I'll take whatever I can get on it short in these markets. You know, if it keeps going, great. I usually get out of all of them at the lug, but this is such a short, you know, it was only a 20-point winner, so I'll hold the other two here and then we'll see what happens. All right, let's go see what happened in ES here real quick. I feel like I won the lotto by catching a short in this market. It's just every day, it's just straight up, straight up, straight up. But it's a perfect lesson in never thinking markets have to stop or they can't go any further. All right, so this event came in here. This is pretty important what's going on here with the ES. So this is still bullish, obviously balance breakout, right? Multi-day balance. Balance is just traders placing bets. Obviously, the longs are winning right now. Here's the return to the top of balance. It's still bullish. If this event actually was bullish, I could have taken the long off of this, but it is a bearish event, so no longs off of that potentially. What you want to really pay attention to for the bigger picture thesis is if this comes down, you want to watch the high volume node of this. It's basically an area in the middle of the balance area, right? If that fails, it doesn't bounce and it gets through there, then I'm going to be taking double-sized shorts because that's a failed balance breakout, and these things are so due for a pullback. Doesn't mean it can't go higher, but if you start to see areas fail, then you're probably going to finally have a pullback, right? So that's how you can tell. You never try to like catch the top thinking that's it. Once the market shows you its hand, right? So this could be the top. If this does something like that, then I'm okay shorting it. But I'm never just guessing, oh, this is it, this can't go any further, so on and so forth. So I would say 55.50 is the line in the sand, especially if it gets through this Izzy zone. Then this thing is very likely going to head back down here, and that's a good 50 plus points. So I will trade double size shorts if that happens. In the meantime, it's still a bullish market, structure wise anyway. NASDAQ basically just held this zone here, and here's another reason why, you know, we saw the blue lug. Well, this is also in an Izzy zone that led to this directional conviction. Change colors here. Came down, buying tail. So this is an area. This could just bounce and keep doing this. If this breaks, then we can potentially take a balance breakdown, I should say. We have a name for that strategy too, called breaking away. So when I'm referring to strategies, again, they're just important areas that I look for, or important activity, and I'm looking for a volume event, right? So far today we've already talked about the Izzy. That's an inflection zone trade. Barks and licks, well, I'm sure we'll have plenty of them. I didn't take it in NASDAQ. Of course, when I don't take them, that's when they rip, but I didn't take that one. I did take a pick earlier in gold. We'll talk about that. That's filled to the tick and then stopped out. So these are more the balance trades where you can get in aggressively. The breaking away is when you're breaking out of balance with double size. My condition is I need 200% or more relative volume. We'll potentially go over these because it may happen in Russell here. We'll look at that in a second. We'll go over these as they happen, but in the meantime, I got another setup here in NASDAQ, so I can now trail my stop to this guy. You can see these sell stops. That's basically an instant rejection of it too. So this is a 270 sell stops. Usually sell stops are just retail traders puking. They're usually very good fade trades. If they hold and continue lower, that means the big money's coming in behind them. So like for instance, this one was a stop and hold over here, right? So the puke happened, it held, and we see the big money sweeping this thing and then continue lower. Now you get another stop run. So I don't just hop out right away, but if this comes back, now I can trail my stop. You see it on the chart. So my spreadsheet that I'll show you in a second, this is the zone drawing tool. I'll post that as well. That comes up to here, I'll stop out of the trade. If not, there's things I can do here. Hopefully we get some new lugs, and I have no problem shorting this thing. I was just afraid to short other shorts into this lug, but we may be getting. This is an important area though. I'm probably going to get out of another one here if it can't push through. This is the bottom of this market profile composite. Multiple days value area merged. We got new lugs. That's a good thing. So I'm going to get out of one more here just because I'm not a fool. I know these markets. As far as they just can't stay down, and you know, in these conditions, every move lower, these buyers just soak it up and then rip it the other way. So I'm not guessing that's going to happen. I'm getting out of some of my position in important areas because I'm not. Again, I'm ready for the usual game that they play. I'm trying to find what I got on here. Yeah, all I had on was the. All I had on was Izzy. All right, so in the meantime, I got out of one more because we're real close to that bottom of that market profile composite. Right there. And then I'm going to trail my last one. I have one remaining. I'm going to trail to 76.50. That's what this line is. So the long aggressive on the zone drawer is the same as where you stop out of shorts, right? So if I were to get long off of this event, I'd be getting long at this price. If I'm short, I trail my stop to this price. And we'll go over the spreadsheet here so you can see what I'm talking about if you're new in here. So that's 76.50 is where I will stop out of that trade. So the moral of the story here is, and I hope my trade room didn't screw this up, so I took like a bunch of losses right away in gold. I traded like 4 strategies, stopped out of all of them. So that was not a good feeling. And then I had that right when I got stopped out of gold, I had to go through this nonsense, right? So I didn't panic out of the trade. If it stops me out, it stops me out. This is why I put my stops outside of the zone, outside of an ATR. I held on to it. Turns out to be a big winner. If anyone in my trade room got out because they were feeling, especially if they put on the gold, they took a loss, took maybe multiple losses depending on the strategies. If you panicked out of this, then you got a verbal lashing coming this afternoon. Actually, this afternoon I'm doing a one-on-one mentoring session, if you will, with he's actually a person in my room. He won the Bookmap Blue Jacket contest, and his prize was a one-on-one mentoring session with me. So he was already in my room, and I just literally randomly saw that he won, and then Bookmap, because I offered a free mentoring session to whoever won that competition. So it ended up being someone from my room. Not surprising, right? So anyway, I'm going to be doing a live one-on-one mentoring session with him today for the PM webinar. We'll go over stuff that's happening too, but you might want to tune in for that because it's more of a one-on-one thing where he's going to ask specific questions, so on and so forth. He's a very good trader as it is. I mean, he's got a pretty good handle on what we're doing in here, but it'll be good to go over, see how it works one-on-one, which I also do for traders. All right, so this is real close to that already validated. So this is the zone drawing tool. It announces when it validates, meaning I got an ATR below this event. So now if we go ATR retest confirm, I could put on bark trades, lick trades, and a potential pick trade, right? Meaning you got your event right here, again, an important area. I could take this first move out, but I'm going to wait for retest. I think we all know why. I'm not going to just jump on. I'm just not going to jump on aggressive short. So if it comes here, here, off of this event, I'm going to take the pick short. We also have in play the bark short, which is any blind ATR retest confirm of any volume event. And then the lick trade, which is basically a bark trade, but the ultimate target is liquidity. Let's see if we have liquidity below here too. Yes, we do. I like that. So this is the pattern. We actually have a trade for what's going on right now. We just formed this at a trading firm that's trading this automatically. I can't keep up with these trades on these webinars, but we trade. This is the 1 ATR, this is the 2, this is the 3. These markets have a ridiculous propensity to come back to the volume event. So we actually have an algo running now, and you can do this by hand. All the values are on this zone drawing chart, where you can take these trades. It's more of a scalp trade where you're just jumping in at the ATR and you're out of the zone. Jumping in at the ATR. I always get the question, well, which ATR do you take? Do you take the 1, the 2, the 3? I have no idea. Some days the 1s work nonstop. Sometimes it's the 2s that are working nonstop. Sometimes it's the 3s. I think the best trade is I don't like the 1 aggressive as much as I like the 2, and then I'll take the 1 ATR coming back and then out of the zone, right? Or you can wait for the 3. And that's fine. That's a little more conservative of a trade, but you got to be okay with missing the 1. Like, for instance, if you're waiting for the 2 here, you're about to get the 1 and you missed it, right? So I'm not going to really get into that trade on the webinars, but just know that is part of the zone drawing tool, and that is what you see on the spreadsheet, right? So you can get this spreadsheet. That's not logged in. It's basically the same thing. So the top of this spreadsheet is my position trading, where I put in the zone and it tells me this is what you're seeing when I was saying yellow line, blue line, and then this is the ATR trade. So you can get all that on my website. We'll go over all this here. And there's your retest right there. So you took the 1 ATR winner. Let me post this in the YouTube channel, and if you guys got questions, throw them in the YouTube channel. I don't see Discord, so throw them in there, please. What am I doing here? Thank you for announcing a new Lugs Man of Shizzle. Man of Shizzle, a trader in my room. Good trader. Always very helpful when traders point out things that I may not be seeing. All right, so anyway, here's a retest. This comes back. I'm going to take bark, lick, pick, shorts. Here's my entry. Again, as long as this ATR is correct, get this up, then I can trade directly off the chart. I don't need the spreadsheet. But this spreadsheet is what you see on the chart, right? All these values, I haven't plugged anything in here, but these values are the same values you see on here. So on that document I just posted, that is this zone drawing tool here, right? So you can get it. You can get the pro beta. So the beta test is almost done, but you can get the pro version of the tool, and that gives you all these reversion lines. It gives you Bookmap Bob that announces everything. You can hear him announced and everything. It gives you the alerts here, so you know when when the event qualifies, when it retests, so on and so forth. So actually, I'm short natural gas too. I need to. We'll go over this trade, but I need to see where I'm going to be getting out of some of these potentially. Hold on here. We'll go over this trade in the gold punishing I took earlier. So let's see where we're at here. Really close to the blue lug. Let me see what I got going here. Actually, that's pretty much scratch. I thought that thing was moving in my direction. I guess not. I guess I was short off of that, so it's not really doing anything. It just did ATR retest, so nothing really to see there. So we'll potentially go over that. All right, so again, this qualified short. I'm not. There was nothing for me to jump in shorts here. I could have. Actually, no, I couldn't have done that either because this never got to the fill line where I would actually enter a trade. So this is potentially a short setup, but if this turns around and gets back up to this ATR, then my shorts are disqualified, right? So that's how I judge. If the market's able to push an ATR, it tells me potentially what condition this event is in. It'd be a bearish condition. As long as it doesn't touch the other ATR. If it touches the other ATR, then my potential shorts are off the table. And longs are off the table too for this particular setup because it touched the ATR below. That's how I trade these. Again, I've watched tens of thousands and probably more than that of these things over the last 7 years. And from watching so many, I've basically figured out the best way, the patterns that these things trade in, right? That are the best edges. So that's how I determine. So everything is still a go for the shorts here if this comes back. So I got to put these in. So the other great thing about this is you get your position sizing on this zone drawing tool too. So I could put on 4. And all it's doing is basing, actually I wanted to make sure the ATR is here. So it's showing me a 24.36, pretty much spot on. So I can trade right off the chart. So my position sizing is based on what I'm risking per trade. Again, I'm risking 10% of a $5,000. These are Apex accounts. I've got like 3 of them live, another 4 right behind them about to be live. And I do that to keep track of each strategy, so on and so forth. I'm risking 10%. If you're trading your own account that you're living on or whatever, I do not risk 10% on your trades. We go over this every week. The most you should be risking on a trade is 2%. And if you lose 6% in a day, you should shut it down on to the next day so you don't have huge, 10, 20, 30% drawdowns on your account because you will blow out if you don't follow that rule. I won't go into that rant right now. All right, so if this comes back, I can put on 4 at 13 quarter. I'm going to just wait a second here because if this, I'm not going to spend time putting all these orders in if this thing hits the disqualification for a short, which is the ATR line, so 76 quarter. So keep an eye on that. Sorry, I forgot about ES. Let's see what's going on here. I'm sure it's retested in the zone. Surprise, surprise. I don't know if you guys have seen this pattern that I just talked about a little bit ago. Here's your, so this is a good example. Well, both the 1 and the 2 worked here, right? Here's your 1 ATR reversion. You were filled there. Here's the stop for the 1 ATR reversion. Here's the 2 ATR reversion. Here's the stop for that. Both of them filled. Both of them right back to the zone. Winner, winner, chicken for dinner. So if you guys are taking those trades in the trade room, that was perfect. Even on this one, if you just wait, if you said, okay, I'm going to wait for the 2 and take the backdoor 1, you got that too. So you could either take an aggressive one, you survived, you didn't stop out. If you took the 2, you survived, didn't stop out. If you took the backdoor 1, still a winner. So that's that trade. And again, I can't take those trades on the webinar because they're just so labor intensive, right? You're like in, you're out. But we do have this live with a trading firm. I showed this last week through like, I don't even know how many days it is now, maybe 10, 11 days of trading. It's up like $10,000 trading 1 lot. So, and it's just firing off the 1, 2, and 3 ATRs. The A+ ATRs, I'm not going to get into that right now. You can learn that in my trade room. But they're just better quality ATRs where they're just not every single one. But I'm 100% convinced, and we'll probably have this algo eventually, that if you take every single one, every single time, you still will make money. It's still an edge, right? But anyway, that's running with the trading firm. We'll get a little more better stats where I can come back and say, yeah, the best ATRs for ES are the 1s and the 2s, or the 2s and the 3s, so on and so forth. So, all right, so this retested, confirmed. So let's see what. So one of my, for Barks and Licks. By the way, I didn't show this. So for, remember, I'm gonna short Barks and Licks and NASDAQ. algo guy. This is exponential moving average. This is what I use for my filter for the barks and licks. This is bearish right now, so I can take those trades. And this actually looks like it might be a red rum too. We'll take a look here. Anyway, the blue, the shorter term exponential moving average is below the red. That is a bearish algo guy. So that is my green light to put on barks and licks to the short side for NASDAQ. As long as this is real close to disqualifying though. If this holds, I'll put it on. I'll put on the shorts. But if this gets above here, then I'm off of that. As far as ES, this is not bearish yet. You can see it's trying to pull. So when this thing pulls, when this crosses, and the blue crosses below, you get those algos that jump on that moving average cross. Right? So that has not happened yet, but that's pretty close. So what I'm going to do here though, so we're at the event, came back. If this comes back and the entry hits, this is probably going to be pulling, so I will take a short in ES if this comes back. So let's get those set up. So you got your ATR, your retest, confirmed. Those are my conditions for the bark and the lick. See if there's liquidity down here. And we got Yellen talking too, so it's just nonstop. Fed guys, Yellen. Anyway, I would take the lick, and that would be, if I put the lick on, that's my ultimate target. I won't get out into other traditional areas. I'm trading down to that. So, but you got to remember though, if you're trading during Fed speak, Yellen talking, numbers, you are rolling the dice because any new information, the market can rip. Any keyword out of their mouths, the market can rip against your position, right? It has nothing to do with what happened prior. So you got to be okay. If you're going to trade with these people talking, you got to be okay with it. So I did it on Monday or Tuesday. I took a bunch of losses on them, or I think it was Tuesday. I took a loss in ES and RTY, like right off the bat. And I said on the webinar, I said I'm willing to do that, but I know what I'm getting into, and both of them are losers. So if you watch the webinar, it's on my YouTube channel. I think I posted on Twitter too with Lance. Lance is he's still in here. He's been gone for a while because I think he's got some family health issues. But he's one of the traders that have just killed it. Following the exact rules that I talk about day in and day out. He's turned since last February. Turned 100 grand into 1.5 million. But anyway, he talks about on that webinar. I just stopped out of my remaining NQ. He talks about on the webinar how he's lost like $40,000 trading during Fed speak, Yellen speak, so on and so forth. So just know what you're getting into if that trades. All right. So if this comes back, I'm going to short a 61.50. My shorts are disqualified that I was going to put on a NASDAQ, right? Because I got to this. Remember, I was already short. Izzy went over that right away. I was going to short this guy. ATR retest confirm. But this hit the ATR line above, so no trade on that event. So no go there. I still have a potential short in ES if this comes back. And again, I'm just assuming algo guy is going to pull if it does come back here, so I will short. This is the position sizing, so this is showing you 0.9 of a regular E-mini contract. All you have to do is times these values times 10 to figure out on the micros. So I'll put on 9 micros. You could put on 1 ES as well, but if you just have one, big E-mini ES on, it's all or nothing. So when you come down to important areas, you got to get out of the whole thing. That's why I like trading micros, because I can get out of, if I put on 9, if it comes to an important area, I can get out of 4 or 3 at an area and still have some on if the thing continues lower. So 61.25, I'll put on 9. I'll put on 9 bark and lick. So let me get that set up. That's in. Bark. That's in. Let's just see if there's any other areas that I can potentially short here. Again, I'm just looking for my important areas with a volume event. Oh, this was a red rum too, I think, right? Oh no, it's not. Sorry, wrong market. I was thinking NASDAQ. So this is pretty important what happens here. So this is a composite that I need to draw. These are multiple days. I think this is 3 or 4 days here. Right? So whatever happens here is going to give you a thesis of the bigger picture stuff, right? So thesis is just my guess on what's going to happen. I trade my volume events. So say this breaks into here and it looks like it's a short thesis-wise. Even if I got a bullish event on something else, I would still take long. So it doesn't stop me from taking trades. You could say if my thesis is not with the volume events, I don't take any trade at all. I don't take trades counter, which is fine. But the point is, if this gets in here, this is telling you something. If this holds, then I expect new highs. If this gets back inside here, well, it's telling you something. I tried to get out of here and couldn't hold, and it gets back in, and the normal, the usual occurrence when these markets get back into composites is to travel to the other side. So that's my thesis if this gets in here. So I could take a pick trade here too, right? So here's the volume event. The market moved inside here. If it retests, confirms, I'm going to put that on too. So I'm going to put on barks, licks, and picks if this comes back. That's this event right here. I'm not going to trade double size here, where I did say I would trade double size on the short size if we broke basically anything below 55.50. I will trade double size shorts, and we already talked about this. And of course, I lost my chart. Hold on here. And that would be a fail breakout, massive fail breakout of this guy. Not massive, but you know, this is multi-day. Right? So I'm watching that. Anything below there, then I would trade double size, and very, very good chance it comes back to this stuff. Right through this gap, or not gap, but this directional conviction. So no double size shorts for me here, but I will still put the shorts on, and it does look bearish. So I'm going to put the pick on here too. It doesn't look bearish yet. I mean, market profile. So I have different things that I use for my thesis, right? I use market profile. So we just talked about that. I use my structure, the balance areas. Talked about that. That doesn't look bearish yet. And then I use lugs. So this lugs is looking like it's bearish too. These are the lug levels. Short nickname are lugs, right? So when markets form new lugs, it's very important. And when they form new lugs, you expect, especially this one was going up, right? It formed new lugs to the upside. Well, if it's going to continue to be bullish, it should hold new directional yellow. So this is kind of like the mean or VWAP type of thing, and prior red. If it does, then you expect red, the next red. Well, you can see that didn't get up there. Now it's coming back. So if this holds below yellow, that's telling me we're heading to blue. That's just a thesis based on that. So I have a thesis short here. I have a thesis short here if this holds inside here, right? So you could trade double size. I'm not going to trade double size in these market conditions yet. If this 55.50 breaks, then I'm going to take double size shorts in any shorts that I get, right? So all I do is come up with thesis, and if the volume events match my thesis, then I take double size. That's it. All right, so let me put the pick trade in here. If this comes back, 61.50 is the entry for that. All right, those are all working. All right, any questions? What about the Market Pulse scalping course? I've not. It's going to be a little bit. I'm trying to do the trading strategy course first. That's close to being done. Plus, Market Pulse just introduced a couple new algos, which I'm keeping an eye on and see how I want to. I know they're obviously going to be edges, but I just want to see the best way to use them. So some of the new ones they have are the excuse me, are the pace of tape, multi-algo, when you can add different algos together. And then I think there was one more. We just did a webinar with him last Friday in my room. But anyway, you can see they've added on so many of these. I only use right now, I was only using, well, you have price change algo too. So I was using price change, I was using volume, pressure, and balance. But now they have the pace of tape too, which we can watch. I think I have this set up here. So you can use this stuff. You can use it to scalp off of, but you can use it in important areas like we were talking about. So a good example I posted the other day in Twitter, you can see here. And I screwed this up because I wasn't at my desk, but it was just a good example of, let's see here. This is right here. All right, so this was just a regular bark, right? I didn't even put on lick here because I didn't see a ton of lick, even though now I see it. I should have put on a lick trade too, but I put on a bark. ATR, there's your ATR, retest, confirm, entered. I got out, the red lug was right here, which we'll look at. I had an order resting because I left my office, right? That was right here. So I had an order sitting here, it filled it. If I was sitting here watching, I could have used market pulse to stay in the trade. So it got to an important area where I usually get out of all of them. Right when I got up there, you can see the pace of tape and the volume and pressure and balance all spiking to hourly highs. That told me that thing was going to rip right through there, or it would have told me if I was sitting here. And I didn't take. I mean, I got out because I wasn't here, and then I came back and was like up here, and I'm like, damn it, I would have stayed in that trade. And then this happened. Where's that? So basically, I cost myself an extra 30 points, and then you can see right where it bounced off of up there. So and there was no market pulse stuff up here. So I got out here. I could have held that thing for another 30 points. So that was my bad, but shoulda, woulda, coulda trade. Like I said, I caught 20 points of it, but the point is you can use these market pulse areas or use market pulse at important areas to judge whether you should stay in the trade or not. So right now I'm not seeing anything happening on, and this is all on one. This is the one bad thing about this. Everything is on one subchart, right? It's like giving me a headache just looking at it. So on the webinar on Friday, we had the developer on too, one of the Bookmap developers, brilliant dude, Vadim. Hopefully this will happen soon. He said we're gonna have like tabs for the subchart, right? So you'll have like that. So if I click on this tab, it'll show me the SI information, stop iceberg information. This tab can show me volume, pressure, and balance. This tab can show me so you can just switch between tabs. Instead of going over here and you can't even see it, and turning stuff on and off, right? So it's like I can turn the stuff on and off, but it's just a big pain in the ass. Just give me some multiple tabs that I can, funnel through. So that's in the works. Hopefully, that was my main request. And you guys, give them feedback. You get the market pulse or anything else, give them feedback. But yeah, the courses, that's a little bit of ways away because they've added some new stuff too. So I want to make sure I cover everything that I'm using when I put that course out. Omed, hi, just subscribe to your SPX option. That's not my stuff, guys. That's Spot Gamma. But I can't get it running in my Bookmap. Bookmap support, no help. So you guys, this is just a thing you can bring into Bookmap. This is, if you're talking about Spot Gamma, so all you do is when you go to my website, and you get, this is all the stuff that you can get discounts to. We'll go over this stuff too, but if you go over here, you get Spot Gamma. Scott, you get 2 weeks. Just put in Scott. You get 2 weeks for free of everything, right? So you get the hero, you get the commentary, and you get the levels, right? So what you want to do, if you have Bookmap, you go over here to integrations, right? Bookmap, right here. You click on this, then it copies it. Then you go into your Bookmap. You open a cloud note column, right click that, hit notes, cloud notes. It'll say you agree, blah, blah, blah. Hit that, and then you paste it right there, hit save, and then it brings in all your values. But it's not me or Bookmap, right? That's Spot Gamma that you can bring in the levels. So that's how you do that. All right, got these shorts working. I caught a decent. So you guys see, like I got out of some over here right when we got on the webinar. I got out of some more down here because it was the bottom of this market profile composite. So I pay myself as the market makes money available to me straight out of trading in the zone, right? So this came straight through here, tried to get out, no go, and I got out of some. I forgot what it was, but I got out of some there. Oh, it was that blue lug, remember? And then that formed new lugs, and I'm like, okay, maybe it's go time for a big move. Bounced off there. I wasn't going to screw around. I got out of another one. I just know these markets. When you're in this market environment, when you hit important areas, you be wise not to hold and hope it goes through. So I got out of another one there, and I stopped out of my final one there. So I got nothing on in NASDAQ. There has been no new setups here. So I'm just waiting for something new here. And I got shorts working in ES. And we got some grain stuff. We get that over there. Grains, you do not want to sleep on grains, and then we'll go over my gold beating. It's the start of the day. It was not fun. Thing was, at gold, I'm bullish too, like as far as the bigger picture, and I should have been a little more prudent with my trade. I'll show you what I'm talking about here. So anyway, we got some sell ice, and actually this is bonds. I missed a trade here in bonds too. Right when I opened my book map up, I heard this fire off. This one hurts. Let's see, where's it at? Oh, book map was running, but I sat down and I heard this, and I just didn't get over to it. Where's it at? Where's this one? But it retested, confirmed. I'm not seeing that here. Or was this an Izzy? I think this was an Izzy. Oh no, it did, right here. So I heard it. Yeah, right here. It was quick, but I heard it, and I heard Bookmap Bob say it confirmed. So see that ATR line? It did the retest. I should have been short, and I looked over and was already down here, and I put my order in case it came back, and I missed it, and this was a great trade. This is a great bark and lick trade. Missed it. So anyway, we got some stuff firing off in there now, and I could have trailed my stop to this stuff, and I'd still be in that. Sorry, this stuff over here. So you got some sell ice and bonds. I'll come back to that. That's a very slow mover most days. So, and I already missed the trade, so I don't want to look at it because it makes me mad. So we'll go over here and see what's going on in soybeans. Got buy ice. It's already confirmed as a bullish setup, right? Hit the ATR line. Let's see bigger picture what we got for in any important areas. So this is Izzy zone, inflection zone. This was from stuff from over here. This gapped up, selling tail, directional conviction. That's why it's there. Came in. What do you know? Bounced right off of that zone. So I don't trade these zones by themselves. Yeah, it's an important area. I wait for a volume event to confirm to take the trade. So let's see. This was 90 or 88 to 87.75. Yeah. No. Why is this? Oh, you know why? Because this is. I need to switch months here. So this kind of sucks. So we're in between zones, but this is July wheat, and it just rolled. So I'm not going to do anything with this, but that looks like you could have taken that trade. I mean, it's the equivalent. So, Thinkorswim sucks as far as rolling and everything else, and a lot of other reasons. I'm trying to get off this program because it just sucks. So, in my opinion. Anyway, that buy ice happened in October, or in September wheat, but you could have, it's in the same area, so you could have taken an Izzy off of there. I missed that trade, obviously, but that's right there. You got a buy ice event in an important area. Take the trade first, move out. You should have been long here, the yellow line, and then trail your stop to this. So hopefully my room caught that. I know Madam Shizzle trades grain, so hopefully you caught that, but those zones are still July, so I'll have that fixed by tomorrow, hopefully. All right, so I got my shorts working here. Let's see what happens. Oops. See if you guys got any other questions here. Not SPOC. SPX option visualizer, not SPOC Emma. That's what SPOC Emma is. SPX option visualizer. That's what SPOC Emma is, Omid. I did not take the CL bark. I had it on, and that's when we'll go over these gold beatings here, and I'm like, I kind of forced this. So I drew this manually, this zone. Someone in my trade room pointed it out. I did not get threshold here. So my threshold, meaning I need to see a certain amount of volume on the subchart to trade these events, right? So my threshold for CL is 150. It was close. This came in, it wasn't really right after. I was kind of forcing it, and I was just like, you know what? Kind of like I forced the gold Izzy earlier. I'll go over that, but I didn't do anything off of this event. I'm going to wait for a new one. I mean, crude is obviously bullish, but... All right, I just got into short ES. What could go wrong there? Because these markets are so bearish, right? Not. So anyway, I could have taken a Izzy. The event wasn't full threshold for me, and this is an area where this market could fail, at least initially. Not initially, but as this comes up here. So I just didn't want to force a trade, so I did not take that trade. That's the long answer for no, I didn't take it. Now, if we start moving back to some of these areas, then yeah, I'm going to take longs and I take them double size, right? Maybe not this one because that would be a fail break out of that guy, but say this came all the way back to this guy, yeah, I would take that double size. This one I would take double size too. This is where this gapped up from. So this zone I would take double size. Other than that, I'll trade normal, but I need to see a regular event that's over threshold. I just didn't force that. All right, let me get the stops in here. So that means this thing's going to rip off the page, by the way, because I didn't take the trade, and I think I'm 100% trades I don't take that turn out to be winners. All right, so I filled here 61.50. Here's my stop up here, guys. That's the way I trade these. That's the best way that I've determined to trade these. I know I hear the groans. Well, when I put on an ES trade, I want to risk 4 points to make 8. Okay, great. 4 points. That's great that you want to risk 4 points. The market doesn't give a flying you know what you want to risk. The market cares about volume events and volatility. So I force, so I don't get algoed. You see all this nonsense? Looks like a Christmas tree. See I'm messing with you? I don't let myself get algoed out. If I'm going to be wrong on this trade, I force it to come back the ATR. I force it to get through the volume event. I force it to push another ATR plus 15% out of the zone, and then I say uncle. So this is my stop price for this short. This is a big resistance area too. So this short is not bad as far as we've already looked at we talked about coming up with the thesis with the market profile composite and the Ludwig levels and the balance areas. Well, you can come up with another thesis with this. This is a very powerful thesis, and even says in here, I got to remember to put my stop in there. Futures indicating SPF just above our major resistance range of 5,500 to 5,510. He's talking about SPX options right there. So you can see this is basically where this failed, right? Overall. It said 5,500 to 5,510. Right? So the thesis is if this holds, maybe get a big move here just off of this, but we already gone over the other ones too. I'm under no illusion this is going to be a fun trade. I mean, this is still bullish according to this. All this is come back to the top of this area. But I followed my rules. Actually, maybe I didn't follow my rules. Let's make sure algo guy was bearish, or I will get out of those puppies. I've lost my algo guy. But, even if this trade works, I'm very likely going to be tortured because the market is so bullish right now. Why can't I find the lead algo guy with my sweet Thinkorswim? Love it. All right, so technically I did, this is not a bearish event yet. I mean, this is not bearish. So I took this trade. If I lose, I'll leave it on, but I shouldn't have taken barks or licks. My rule is I need to see the blue below the red to take those more aggressive events. Aggressive meaning not I'm getting in aggressively, meaning they happen nonstop. So I use this as my filter. I just skirted the rules there. I was assuming when it got back down there for the fill, it would be bearish. It's not. So I should probably get out of these. It's in my face, of course. I'll leave them on just because of the thesis with the market profile, but I should not be in this trade yet according to my rules. So I'm breaking my rules here. So if I lose on this, then I just have something to bitch about to myself that I should not have put that trade on. But I'm short bark pick. The pick trade's fine, right? I don't need algo guy to confirm. So remember the pick trade was this trade. I'm fine with that short, but the bark and lick I should not have on right now. So the pick trade again was, let's spread this out for today's action. So picks and Izzy's, I don't care which way algo guys, what direction algo guy is. So you got the event, you got the retest. I'm fine with the pick. The barks and licks I actually should not have on yet, but I'll keep them on like I said. So that's that. All right, Jim, I'm not going to talk. Come on, dude. I'm not going to talk about hot knife through butter on these webinars. Like, these are newer traders. They're going to be like, what in the hell is this guy talking about? But yeah, if you want to, go right ahead. So I'm not even gonna get into that on the webinar. If you come in my room, you can. It's an advanced setup. It's technically going to be the 7th setup, right? So we have. I'll just go over this. Good segue to this stuff, right? So let me pull this up here. So I have 6 distinct stop iceberg setups that I look for in important areas. That's all I'm doing, right? Very simple, not easy. Trading's not easy, but it's simple the way I'm trading these, right? So these are my setups, right? This is my course. You can get this course on my website or on the Bookmap Marketplace, right? Highly recommended. You can come into my trade room and you can learn while I'm trading live, but I'm trading live. I don't have time to go over all the basics every time I put a trade on. So if you're going to come in there and you're like, I can learn as I go, fine. But this stuff gets you can hit the ground running if you understand this. So you can see it's all about everything you need to know about trading these things, but these are the setups, right? So we got Dumb and Dumber. That's when you get a stop run that rejects immediately. That's the usual occurrence of these things. Stop and hold. We saw one earlier in NASDAQ. So we saw both in that NASDAQ today, right? One was a Dumb and Dumber. Actually, one wasn't quite one was a stop and hold. So this one was a stop and hold, where you got the stop run, sell stops. The big money came in behind it, pushed it down. This one was, it did confirm to the short side, but this is what they usually are, right? You get the dumb money puke and then it rejects, right? So that's the usual occurrence when you see a stop and hold. It'll tell you based on the rules, right? So if it pushes through an ATR, then that's a stop and hold. Technically, this was a stop and hold, but I didn't do anything off of it because it came up and disqualified it. But regardless, these are the setups of that for Dumb and Dumber, stop and hold, Titanic. That's just when you get buy icebergs or sell icebergs that hold in the same direction, right? So buy iceberg, and then it turns out to be a long setup. Broken ice is when the buy. So this was a great example where I got my head taken off today in gold. We got the crude number here too in 5 minutes. That's why it's not doing anything. So yeah, if you're in crude, I would get out 5 minutes to the number, and then we'll potentially trade it. So this was the quintessential Titanic setup. This one I was going to short that. I did. I got filled to the exact tick and got shoved down my throat. Anyway, this whole area though, I should have done this just because the market was bullish. I should have just combined these. Anyway, buy ice, that holds. That's a Titanic setup, right? There are times, many times, that paper, the big money is right more often than they're wrong, right? There was a misconception when this stuff first came out that I said every time you see buy ice, you need to go long. I've never said that, right? I said, yeah, there's a higher propensity for these markets to hold because it's the big money. Technically, whoever this entity was, they could have just kept putting buy ice until the market just relented and went the other way. So yeah, the markets more often than not will hold the area of the way the big money is trading. But when they're wrong, then you get big moves the other way because then that big money, it's the way you have to think about it simplistically, they have to get out of the trade too. So we have a setup called broken ice, right? And then double whammy is when you get a stop run and you get opposing. So you get the dumb money puke. So say the market's like ripping up, you get the stop runs, and then you get sell ice behind it. So the dumb money, the retail traders puking into the hands of the sell ice of the big money. Those are incredible trades that are incredible fade trades. Then you get the other one, step rows. That's when you get like buy ice and buy stops in the same area. Those usually are huge trades in the same direction, right? So anyway, the 7th trade is called hot knife through butter. It's not an official trade yet. It's advanced. I'm not talking about it on here, but that is in the works too. So there might be the 7th wonder of the world coming up here. Not too long, but I'm not going to trade on it. And you're in the doghouse, Mr. Jim Thomas, and I believe Jim Thomas is Dune Runner, who I'm doing the one-on-one webinar with this afternoon for Bookmap. So I might give him a little verbal lashing because that's about all I can verbal lash him because he's probably one of the best traders in the room. So I got to find something to give him a verbal lashing about. So that'll be it. All right, so gold's a little bullish. And this is why I was mad at myself for forcing trades down here, and I got filled to the exact tick. But look at this thing. So what I could take here, though, on a new event, and actually I think I missed it. Let's see. Yeah, I could have taken. So this is one of my new strategies called Breaking Bad. Right here. Aggressive entry, meaning first move out of the zone. Current balance breakout through the high volume node of preceding balance. Trades are taken aggressively. That's exactly what this is. right? This is a bigger picture view. That is balance. That is balance. You're getting a breakout of current balance through the high volume node of that balance. First event you get, you can take it aggressively. So I missed that trade and off to the races. So, and this, what was signaling this earlier too, and someone even put it on my trade room, good job, right? You said heavy relative volume coming in gold. Guys, that's telling you something. Keep an eye on relative volume. This is the relative volume I use. So you can see it's been coming in pretty much all day. You had that, and then you had that, and you have that. That is big money playing. This is like over 5 times normal. So the relative volume I use is, this is the Sierra chart relative volumes. Yeah, this is 6 times normal volume. Very important to know. And it was happening. This is what you want to pay attention to too. If you see a market just ranging, doing nothing, and you see that, and you know this thing is going to rip when it breaks out. Very, very likelihood. Good likelihood. You don't know which way until it goes, but this starts breaking, you're like, okay, because these are traders that are loaded up. Big money's coming in here, 6 times normal volume. They got to get the hell out, right? Whoever's on the sell side of that. So anyway, I use the Sierra chart relative volume. It's showing me this exact time period for the last 30 days, right? I don't like the Thinkorswim. I don't use the Thinkorswim relative volume.
10 seconds.
Got the crude number here in 10 seconds. Because this is just showing me the last 60 bars. Like, it's always going to spike at the open. It's always 7 to 8 times right there, 7 times. Does that mean there's a lot of volume? No, it's showing a lot of volume at the open because it's basing on the last 60 bars overnight. I don't use this relative volume. I want to know the exact relative volume for the last 30 days for this time period. You can use any time period you want. Week, month, 2 months, whatever. I use 30 days. I use a month. All right, so you see, like, I took this trade. I should not have, I broke my rules on the bark and lick, so I'm very likely going to, especially in this condition. So I get what I deserve here. Actually, I did not put my stop in yet. I got to put my stop in. 72 quarter. So that's what I get. Every time I break my rules, I take it on the chin. And that's what should happen. That's why I have rules, right? All right, that's in. I'm not stopped out yet, but I'm pretty sure it's going to stop out.
The US to sell $70 billion in 6-month bills on June 24th to settle on June 27th. And the US to sell $70 billion.
Actually, I lucked out, so I forgot to put those trades on. The only thing I have on is the pick trade. So I guess I forgot to put the entry in. So I lucked out on that. So I was just bitching about something that I didn't even do. But perfect example, like even if I did put this trade on, algo guy was not bearish. That's my filter. This is probably going to be a loser if I put it on. I just got lucky I didn't put it on. I still have the pick on, so if it trades up there, I'm still going to stop out of a short, but at least I didn't have 3 shorts on there. So that's actually, that was a lucky occurrence. Those usually don't happen to me during for my trades. All right, so nothing happened with crude here into the number. We'll wait and see what happened. It comes in there. So I was short natural gas too. We still have this on. I put on barks and licks here, right? That little guy was bearish. Volume event. Stop me if you've seen this pattern before. ATR, retest, confirm. I got in there, though it's just a little bit in my favor, but that's on. And then some areas I'll be looking to get out if this thing does start motoring in my direction. This, I shorted in this Izzy zone. I'm okay with that, but if I lose on it, doesn't surprise me one bit. This is an important zone. You had this balance. You had buying tail out of here, right? This very likely can rip out. If this breaks it, now you have a potential failed balance breakout trade. Actually, this is a breaking bad trade too, right? But we just looked at this bigger picture in gold. This is still bigger picture. It's just not a big. The balance areas aren't as big, but this would be a balance breakdown through the high volume node of preceding balance. Any volume events I get basically below this zone here, so I'd say 2780 or lower, I would take the breaking bad trade. You could take fail balance breakout too if you want off of that, but there's 2 different strategies here if this area breaks to short. I'm already short barks and licks, but this is all stuff you need to know before stuff's firing off. So in the morning you're looking at your markets, you're like, okay, if this happens, I'm going to do this. If that happens, I'm going to do that. And then you just wait for the real-time volume events, the SI events, to confirm, and then you're ready to go. You're not scrambling to figure out, kind of like I'm doing right now, where we're at, right? So right now I'm short barking lick there. I just want to see if we're into a lug or anything so I can yeah, real close to the lug here. So I'm going to get out of one of these right now because I'm not going to be on the webinar to see, I'm not going to be able to watch it closely to see if we bounce off. So let's see, I got, what is this one? So just get out of two of these. 25. All right. So I got out of a couple right at the blue lug, right? These are areas I usually get out of all of them. But now we can actually, you can see they're actually, I don't know why this isn't making noise, but you can see they're hitting it here. So this is how you can determine if it's going to blow through here or not, right? Goes for any market. Do I not? I don't know why that's not making any noise, but so let's watch the new market pulse. I think I got pasted tape on here. So you can see here, this is the volume pressure imbalance. So you can see they're engaging. This is the most selling in the last hour. And you can see the pasted tape over here too. So this whole area is a very good indication if this thing's going to blow through the lug, just like I showed you guys the ES the other day. If this fails, then I'm going to get out of the rest of these things, right? And that's with even without an event. I know we have the blue lug here. I know how powerful of a support area that is already. But I'm going to give this a chance because the sellers are engaging. Pasted tape is picking up here, right? I'm going to give them a chance to blow it through. If it comes back above here, I'm just going to get out of these. So that is only in a couple ticks. Here is the Burke trade. All right, so that comes up. I got it at 2806. Touch 2806. I'm going to get out because that's above this base of tape. These guys will be wrong too. This aggressive selling would be wrong. On the flip side, say there wasn't a lug here, right? And you see this aggressive selling. Well, if this area holds, we actually have a pattern for this. Surprisingly, it's one of these where it moves away, retests, and then so the next low you can add to the trade too. I wouldn't do it into the lug, but normally you could add to that. So you can use this. This stuff is fleeting. It's not. These are not like SI events, right? Stop iceberg events. These are king. The SI events are king. But you can use this real-time volume information to piece out a trade, lighten up your trades, or add to your trades as the market is moving in your direction. So maybe we'll get an example of that in one of these other markets. But you don't want to mess with the lugs, especially if you're not getting powerful stuff coming in. All right, so this is just, like I said, guys, like even if this trade works, this pick trade, pick short is going to be like pulling teeth. Like these, they're just mindlessly buying any dip because it works every single time, right? I don't fault them. I'm doing air quotes for them, but this market's still bullish. I mean, yeah, it's in the market profile composite, but this is not, there's nothing bearish about this yet, right? And you can see it bounced right off of that. So I took the pick short. You know, you don't have to, say you're looking at the pick short too, but you're like, you know what, this balance area, I'm not going to short into that top of this balance. It's just, that's still bullish, right? So what I will do here, if this does move out, stop me out, based on what I'm seeing here, you get a buying tail right now, bounce right off of that. I'll take double size longs on the next event, right? So I'll stop out on my pick short at 72.50. Then this is giving me a lot of information. We just saw, you see how it cannot hold in here? So I took the pick. I didn't do anything wrong with the pick trade. I was supposed to take that trade, right? I was supposed to take that, and I would even waited for that. This cannot hold. This is out of here. It bounced off that balance area. If I start getting bullish events, I'm going to take all my longs double size, right? So, and you can see this thing never pulled either. So, if then scenarios. I'm short. If this gets back inside here, then I got a different story. But if this moves higher, I'm taking, and it looks like it certainly is, because that's all it ever does, I'll take double size longs.
Rather than be disqualified.
Alright, so I'm not sure what's going on here. This is an A+ reversion trade here. Reversion 3, because you have your entry basically right back in this event. So this is what I was talking about with the trading firm. We got this thing running algo-wise. It's looking for reversion trades that are in prior events or heavy footprint. I'm not going to get into it, but this is the 3 ATR, basically right at the bottom of that, and the stops above it. So this is not a bad reversion. This is a very good, actually, reversion chance. All right, what else we got? You guys got any questions? Oh, Med's so sorry, Scott. It's fine. Yeah, I'm not. I have nothing to do with this except for, you know, I promote it because I use it. So guys, so let's just go over this since while we're watching paint dry here. Let's just go over all this stuff because this is more of a basic. These Bookmap webinars are more basic because there's newer traders, so on and so forth. So here I already went over this Scott's drawing tool. All right, they're still hitting natural gas, by the way, and I'm still in that. Remember I said if it got above there, well, it didn't get above there. I could have added here if it wasn't for the lug there, like I said, but I'm still short some. So here's the drawing tool that will draw automatically. As you've watched, if you've watched any of my webinars for the last 7 years, I had to draw manually, which was just a huge pain in the ass. Now it draws automatically. The thing is awesome. Developer, my trade room, Yoan Trader, helped me develop it. He's brilliant. Get that. You just go here, and you get, again, you get the beta for right now, and you get the, see, why does this do that? I don't understand why this does this. It's not 0. For some reason it's showing 0, so that's not very helpful. Let's try it again here. Yeah. I gotta send this to developers. It's kind of a juke. You go in there like, oh, it's 0, I want that, and then you go to check out and you gotta pay. Like, that's not good. I'm gonna send this to the developers. All right, so anyway, it's $59 a month. Trust me, if you're drawing those by hands, $59 a month is like it's a godsend. So anyway, that's that. And then you got, what else here? Here's the YouTube videos. You can see how I use it. This is the basic one. Here's the pro. Go watch that. You can see it. Here's my course. Went over that. Goes through everything. Again, you can learn as you watch me trade, but I'm trading live. It's not going to be easy. You get this, you get the ground running. This is if you want to get the inflection zones that we've been talking about and or the spreadsheet. So you can get this subscription. You get this for free if you're part of my room, but if you can't get in my room, that's this. You can get them independently or together. That's that. My website, everything's on there. I already showed that. Where's that at? So again, everything's on here, guys. Like everything, you can get it all up here. The trade room, you can get in here. You got different plans, and then you get discounts off the courses and mentoring, monthly, quarterly, yearly. And then you got my courses, so you can get this on Bookmap Marketplace too. This is the newest one here. I don't know why that's not working either. What's going on here? I can't believe technology isn't working for me. There you go. So that was the course, mentoring. Here's the zones indicator. It just takes you, you know, because it looks like it's free for today. Just kidding. I don't know what the issue is there. What else? And then YouTube channel and so on and so forth. So everything's on my main website, but what I was getting at here is everything I'm going over is all on here, right? So here's Bookmap. You get discounts to subscription. Apex, we'll get into that in a second. Use coupon code Pulcini50 for any sale they have going. Spot Gamma, we talked about that. You get 2 weeks for free. Highly recommend you try just for his commentary every day. Commentary on the levels, it's gold just for that. And then you get the hero that's showing the real-time options activity. Can give you real heads up. Actually, let's look at what's going on there today. See if I have a chance on this short. This usually will give me an indication. Yeah, I mean, this thing is hanging near the lows, so it's definitely not ripping yet. And you see these flows coming in. So there's some big options flow at this important area. So it's probably bearish flow because, like he talks about, if you see the flow coming in at these major spot gamma levels, it's usually like resistance. So we'll see if that holds. But I'm not holding my breath right now on any shorts. Let's look at Mag 7. This is really important too. So Mag 7's kind of near its lows too. So that's interesting. Speaking of which, let's look at our internals real quick, and I'll go over the rest of that stuff. This is interesting. So this is just the Mag 7, the highest weighted stocks here as a synthetic. That is borderline. I mean, this is pretty much what I'm seeing here are two different failed breakouts, right? Again, this is a synthetic, but it's the same, you know, these are all the stocks put together. What this is showing me is you have a bigger balance there, tried to get out. You have a little balance here that kind of held at the high volume, now, which it should. You had a failed breakout of that. So that is looking like that could happen, right? I know that's crazy talk, but, and then you see here, the tick can barely hold above zero today, right? I mean, you had some blips here, but we could get a sell-off here. I know that's crazy talk, slap my mouth for saying that, but you never know. And I'm short. And again, you guys, it's just a guess. I have no idea. Nobody knows until you see what's happening. And I let what's really happening dictate my trades, right? If I get short setups, I'm ready to go. If I get long setups, I'm ready to go. Doesn't matter what I think, I'm letting the market tell me by using my volume events. Or not my volume events, Bookmap volume events, CME volume events. Twitter, Trade Room, and here's a discount, same thing on my website. So again, I'm using these Apex accounts for all of these trading strategies, right? So each one has I assign a number to each one of these. So like 3 of them are live. I've got another 4 that are almost live. They're real close to hitting the profit goal. So again, what I'm talking about here is, we got a gold setup too. Right, you go to the website here. I've been using these guys for 2 years, right? I had all this stuff. Oh yeah, they're a scam, blah blah blah. I've used them for 2 years. I've been paid on multiple occasions from them on different accounts. They've done everything they say they're going to do, right? So I know they're a dime a dozen. These things, these trader funding things. This is the best one that I've seen. That's why I use it. Anyway, you go down here, right? So most of them were 150. I'm trying to switch to the 250, but so you got to make, you know, in this instance for the 150, you got to make $9,000 before you lose 5, right? It's a great deal because you have money on the game. You know, you do the discount. I think it comes out to like $60 or something when you put in this Pulcini 50. You get the discount. So if you make $9 grand before you lose 5, you're good to go. But you got to be careful. There's been many accounts that I've had, you know, up $8,000, right? And then you have your typical drawdown, like in tough trading week or whatever, and you draw back 5 grand. I'm still up $3,000, but I blow out of the account. So you got to be very cognizant of that with these things. And it just helps you control your risk, right? It just helps you become a better trader. And again, you can work on your trading and you have very little skin in the game, but you still have something in the game, right? Even if you pay the $64 or whatever this didn't. There we got stops and CL2. I'll go there. Even if you pay $64, you're not gonna just haphazardly just throw trades in like you would do on a simulator, because you're still gonna lose $64. So it controls your losses as you learn, but you're still engaged because you got money on the table, right? So highly recommend, if you're learning, even if you come in my room and you're learning this stuff, don't be trading your own money until you know what you're doing. Get one of these, work at it, and then if you do well, now you're funded anyway, and you don't need to trade your own money, right? So that's my recommendation for that. And then tick strike or spot gambling, we talked about that. Tick strike, Trader Sync, highly recommend you use this. The more traders that use this in my room, the better they do. They find out what products they trade best, the hours they trade best. You get discounts to that. Ludwig levels, this is the second most powerful thing I've ever seen. Again, go to her website, do the 3-day trial here, put your name in, and say you saw it on the Bookmap webinar. She's got special pricing. And then here's the reviews for my website. So Trustpilot, just go there, you can click on this link and put in Scalpel Signature. There's only been one jackass in the entire time, but you're going to get them. I'm actually surprised I've had very little jackasses in the 3+ years that I've been, that trade groups have been around. So that's a good thing, right? That means people are learning and not being jackasses. All right, so we got some sell stops here. This might be an easy trade for crude. It is, right? So the market moved out, bounced off this Izzy zone, came back here, sell stops. I'll take that long. I'm not going to take double size longs right here. Into this zone I would. Right here I'm not, just because it's fighting this stuff. Doesn't mean it can't rip right through there. I mean, we're watching gold. It ripped right through its today, right? So it's just going to be like pulling teeth probably. So I'm not going to trade double size long. I am bullish this market. If you trade double size long, I wouldn't give you a verbal lashing. So with Izzy trades, I take him aggressively in most instances. So that came back down to the inflection zone. Here's your volume event. First move out, I'm going long. I could put on 12. This is Izzy. see where else we're at. I'm pretty sure we're close to a blue lug, so I got to be careful with that. But let's see. 81.33. All right, so that's an Izzy. Let's see what other important areas are here that I can potentially get long off of. Yeah, so that's not surprising. First time up here. Wow, surprise, surprise. Shocker, shocker. Red lug holds, right? This is why I respect these things so much. They're the second most powerful thing I've seen. What was that? What did I just fill on there? Oh, I got out of the rest of those natural gas, so it came back above that heavy selling area. We'll look at that in a second. So anyway, you know, if I put this on, I'm going to be very cognizant of this red lug, but it may blow through the next time up. What the hell is going on here? All right, so I just filled on the crude. Actually, I can merge these two, right? So this is a perfect example.
White House says, of course, Russian recruitment is of concern.
Russian what? I didn't hear that. Anyway, single day, single day. This day overlap this day by about 50%. So the rule of thumb is about 50%. You can merge them and make your composite. Very, very, very powerful areas, right? Merge those, and you can see it's broke out of here today, and it's holding out. So that's bullish in its own right. This is today's trade, right? So there's nothing else for me to get long here. You know, if this came back down here again and we had another event, I could take a pick, but I didn't quite get there for this event. So the thing I got on right now is the Izzy trade long, and I want to really watch this red lug. It's only 20 ticks away, but I am long, and of course my MO filled to the exact tick. So regardless, I'm long stops at 980.92. And that's how I do it. It's, you know, it's not questioning, oh, should I do this? Where should I get out? Blah, blah, blah. Everything's right, black and white in front of me. I have this is the best edge I've ever seen. It's a probability. That's all trading is. It's finding important areas. Might as well go on the old little rant here before we get off. All right? Until you can understand this and actually believe it, you're never gonna do well trading. You're never gonna make it, right? So you can think about trading in the appropriate manner. The 5 fundamental truths. You can do everything you need to do. Trade like a casino. Actually, that's not what I want to show here, but let's see. So first of all, this is straight out of Trading in the Zone by Mark Douglas, right? Get the book, get the audio book. It's awesome. Anyway, he has an exercise, and this is how the reversion trade was born. I'm not going to get into that right now, but he just says the purpose of this exercise is to convince yourself that trading is just a simple game of probabilities. At the micro level, the outcomes to individual edges are independent occurrences and random. At the macro level, the outcomes are over a series of trades will produce consistent results, just like a casino. Casino knows math is in their favor. I know this is the best edge I've ever seen. Does it mean everyone's going to work? No. Does it mean I don't put one on and I because I've lost 4 in a row and I don't put one on and I skip another one? No. It means I know these work. I've used them for 7 years. I've been trading for 25. I've traded millions and millions of contracts in my career. This is the best edge I've ever seen personally. I don't hesitate when I get events. Yeah, I'll complain. This feels terrible. This is horrible, but I'll still put it on, right? Because it fits my probabilities. So until you can internalize that, and then these are the main. So generally you put odds of success in your favor. That's an edge. You can think about trading in the appropriate manner. The 5 fundamental truths. Then you can do everything you need to do over a series of trades. Then, like a casino, you can own the game and be a consistent winner. Here's the 5 truths. Anything can happen. You don't need to know, or do you know? I added that part in. That wasn't part of the book, but I added in. What is going to happen next in order to make money? You don't know. Nobody knows. All you know is your edge and your rules. That's all you can do. So you put the trade on. If it works, great. If it doesn't, fine. On to the next trade if you have an edge. There is a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. Every moment in the market is unique. That's it, guys. It's not every trade wins. And anyone who tells you they win every trade or tells you they're 80%, 90% winners, they're full of crap. You know, if they're scalping, they may be 80%, but their wins and their losses aren't proportional, right? So they're risking way more than they're making on their trade, so on and so forth. So if you're a 50% trader with a good edge, you could be a multi-million-dollar trader, even 40% or 30%, depending on how big of a trade, how far you let your trades run, so on and so forth. So until you can internalize that, you're wasting your time, in my opinion. By the way, I think I probably missed a trade here, which is not cool. Right off that one, so I ripped through that one. But you notice, like, I didn't get any short setups up here. So yeah, these were important areas, but I don't take trades unless the real-time events tell me to take the trades. So let's see what I missed here. Hey, what do you know? So that's upsetting because I owe gold. I wanted to give gold a little payback, and I missed it. I mean, it doesn't get better than this, guys. These are the best IZZs you can possibly take, and I flat out missed it. My trader better have this trade on, or there's gonna be some major verbal lashings later. Sell ice. Let me clear this out. Inflection zone. Real-time sell ice. And you got sell ice too, so the big money's selling up here too. You take it aggressively. How's that for a trade? And then you trail your stop to that. Please tell me you guys took this trade, please. I just flat out missed this on the webinar. That hurts. That really, really, really hurts. And this is already almost a 100-tick trade, $10 trade. That's how you do it, guys. You find it. These are my important areas. You may have other important areas. Great. I don't care. I don't care what you're using. It's not for me to say whether an area you think is important or not. What I'm saying is, and I stopped out of that crude trade. Anyway, volume event, something real time happening. Even better, it was sell ice in an event. You take the trade, you have a 100-tick winner. So of course I don't put that one on, and the one I did put on is a loser. But that's the way trading works, right? So I'm not being consistent today. Did I step out of this one? Yeah, I stepped. I don't know how. So I filled to the tick, and it looks like I stopped to the tick. So that's my game lately. This doesn't even look like it tagged that price. Regardless, on to the next trade, right? So if I take every trade, if I catch this gold trade and I lose on the CL trade, I'm still net doing well, right? So that point is you got to take as many as you can to let the probabilities play out in your favor. All right, so this is failing. So this is, telling me something's up. If this market's as bullish as it looks, you shouldn't see events fail like that, right? So it doesn't mean anything. I'm just coming up with more of a thesis type thing. So what I would watch for here, you had this little balance here. This is where this gap. If this gets through this zone, you can maybe take some double-sized shorts. The market is not bearish whatsoever, but I could see this returning back to this or the top of that guy. So you could get a pullback, and this is crude's MO anyway. They, every time it looks the way it looks, then they juke you, and then it does one of these, knocks out all the weak longs, and then it goes, right? So anyway, I would still take, this moves into this, I would still take it Izzy long, double size. But if this area fails, then I'm watching, I probably take some double size shorts just for a move back into this, probably. Because this should not be failing like it just did, right? As far as what should happen. But this is my favorite, getting filled in. This is why we have these lines. And I've moved this entry over the years from experience, and I still get filled with a tick so many times. It makes me very angry. But that's the way it goes. And I missed this whopper, like I said. All right, I'm still short ES, though. I didn't stop out of that guy yet. So let's see what goes on there. So, we're getting to the end of the webinar time. This thing does start motoring down. Some of the areas I will look to get out, and I will be looking to get out in a hurry because the market is so damn bullish. Point of control is one of my areas. So 550, 555-ish, right? So that's another 7-8 points away. So guys, these are consistent areas. I'm just not coming up with an area on the fly. These are the areas I get out, I piece out of every time, right here. I pay myself as the market makes money available to me. Ludwig levels, 100%. We've already seen that today. Market profile composite highs, lows, POCs. So this is a POC, point of control, of a composite. They're very powerful as well. I don't initiate trades at the POCs, but I will get out of some of the position. So I'll be watching that. So this is telling you something. Like we said, it looked like it was going to do this. It's back in here again. I don't want to say pretty sure, but for this to get in here, get back out, especially in these market environments, it should have done that. Now it's back in here. I would put odds at 70-30 that it does that instead of coming back out of here again. There's just odds. It's just a guess. I have no idea. I'm already short, right? But this starts motoring down. I have a feeling it's going to. Then I'm getting out there. And remember, the spot gamma level's up here, so on and so forth. So trade's still on. I'm in it. I did not put on barks or licks. If this thing turns, I'll be watching this closely. So knowing what I know here is what I'm saying. If this pulls and it's trying, and I start getting new setups, I could potentially take double-sized shorts. Yes, I said it. Double-sized shorts in this market environment based on what I'm seeing here. Just my thesis from that, right? And I really want to, and we've already talked about this multiple times, if this trades through this high volume node, then I'm going to take double-sized shorts. So keep an eye on this 55-50 area. That's the high volume node. Events through there, I'm going to take double-sized shorts. So we talked about this hero was kind of signaling this may go down. Let's see where we're at. Where you at, Mr. Hero? Yeah, see, and this is on its lows, Meg 7. This is on its lows, right? So this is options activity. This is just one player in the market, but these dealers are large players. They have to hedge themselves with futures. So dealers are getting loaded up with bearish, either you can even break this down. This is how cool this is, right? So it's more puts coming in, right? So somebody's buying puts, or people are buying puts right now more than selling calls. This is coming down a little bit, but it's more puts. Well, the dealers get loaded up on the other side. They got to turn around and come to the futures and sell futures. They're just one entity, but most days they are the main entity. So that is pretty much why, because nothing else is going on, this thing is starting to motor down. You can see this thing is following the hero basically tick for tick right now. You can come up with strategies just with this thing alone. And there will be new strategies here. I just haven't got around to coming up with these yet. And plus I wanted to watch it for a longer period of time. But you can see this is doing exactly what the ES is doing today. That tells me that these guys are in control today. They're running the marketplace as far as their orders, right? Look at this. I mean, it's the same exact move. Boom, 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 boom. And it's making this noise too. Boom, right? So very important to take a look at here. Again, this moves just like markets. So it doesn't mean just because it's going down, you short it. But what you really want to pay attention to, so say this market's getting smoked, starts getting smoked, and this thing starts drifting up, you better be ready to get out of some, because it's probably going to turn around and come the other way, right? Or you can look for divergences, so on and so forth. This is really important information to keep an eye on. So again, go to their website. You get 2 weeks for free. Try it out yourself. You'll see the power. All right, let's see if there's any other questions before I hop off here. Curious B for NQA plus reversion. I'll go get cross area of possibly DQ. Yeah, so you shouldn't be taking. So I'm not. These are, you learn this in my trade room. I don't go into all the specifics of these ATR trades. But if algo guy was crossing, I don't really see that happening. I guess it did. So yeah, that would have kept you out of the trade, right? So it was crossed right around 8 o'clock my time, so 10 o'clock central. Yeah. So yeah, I mean, that was a disqualifier. And he said relative volume. Again, I'm not going to get into all the disqualifiers here. You can learn it in my room. I was going to make a course on it, but I'm not making a course on it now because we got a trading from trading it, and I don't want. I explain it, but I'm not going to have everything written down in print so it can spread across the entire internet, if you know what I mean. I don't see the relative volume wasn't spiking there. Curious, but yeah, the algo guy was crossing, so that if you skip the trade, you did the right thing. I mean, it looks like it's going to work, but if you skip the trade, you did the right thing on that one. Since doc, you need to select subscription monthly to see the pricing for the indicator. Oh, so it's basically user error. That's not surprising. Hold on. Try this again. See, they told me they were going to fix this. This should not be, it should just be just an automatic. He told me this was fixed. So yeah, hit monthly. Thank you. You think I would know that, but anyway, it's $59 a month. Thank you, Sistock. Jim Thomas, GC, is he short? Very good call. I missed it. I didn't see the comment. I hope you caught that trade. Whopper. I mean, instant whopper, no heat. I really, we'll be talking to you later, I believe. All right, that's about it, guys. My mic volume is very low, guys. We've talked about this many times. There's not much you guys got to turn up your thing with it. I don't know what the deal is with this. I have this like on full desktop. See this? See my mic? It's full. It's full blast. So I don't know. You got to turn up your thing. I don't know how to fix that. All right, that's it. I'm still short of yes. Got stopped out on my crude. I did catch a winner here in NG, but remember I said that's big selling area. If it got above there, of course I fell to the damn tick as usual here. But I got out of those, so it was still a winning trade. And then I missed a absolute whopper in gold. Hopefully you guys caught this. It looks like Jim Tevins in my room caught it, but other than that, pretty dead so far. But keep an eye on these markets. Mainly, yes, it breaks that balance area. We finally, maybe can get a sell-off today. And he even says, Spot Gamma says with the options expiration coming tomorrow. So this is really important too, guys, right? You see this tail, see the buying tail. If NASDAQ comes down again and clears that tail, watch out below, right? So nothing right here, no real opinion, smack dab in the middle of this balance. If this breaks out of this balance and this tail, my thesis is crushed. Crushed relatively, right? Things still vertical, but I'm going to take double-sized shorts. Yes, I like pain. All right, I do this every day in my trade room, twice a day. Come on over and learn how to trade. I will see you guys next Thursday. Oh, we got the Bookmap. We got the webinar today too. If you want to watch the one-on-one, go to the YouTube channel. It should be accessible. I think that's it's going to be 12 or 2 o'clock.